for someone sitting on the sidelines today, maybe no programming skills, maybe no tech focus at this point at all, is there still an opportunity from a human level to trade and be successful as a trader?
Yeah. Oh, yeah. I mean, are you asking me if there's an opportunity, or is it possible for humans to still do well trading?
I had a friend of mine who phrased it like this. You know, you're looking at the same things that arguably the smartest people in the world are looking at, coding, you know, some of the most advanced computer systems in the world, and we're sitting here with our meat sticks trying to, you know, punch, go, and stop and time it right to make money.
You know, I when I took over in 2011, 12, I faced a lot of criticism from people in the industry, friends of mine, that said AI, machine learning, high frequency trading, it's going to take over. I tell people this all the time. I've written a bunch of papers on it. Machine learning requires historical data that's how it works,
Sure.
to learn, right? AI, same thing. It requires historical data to learn. Stocks are kind of this weird living organism that constantly change. If this was the case, why would we continually be growing and not shrinking as a business?
Right.
There are so many stocks that are so high frequency trading generally is done where you're trading one component or one asset against another asset. Generally, there's a correlation
Right.
between an index or two stocks, and you have a reference price, and if it deviates from that reference price, you assume it's going to go back to that price, and you put on a trade that says it'll go back, and reversion to mean. When it comes to stocks, not every stock is in an index. All of a sudden, a stock IPOs tomorrow. How does an AI program trade that? There's no historical data.
Right.
If all of a sudden some fundamental news changes how a stock trades, how do you have any historical data to build a strategy around the historical trading of this name that had a fundamental change? What we've had to do as a firm is we've had to move away from the basic names, the sort of top 100 names, top 500 names, and move into the names that are traded less by these computer systems. There's no coincidence that computers are doing such a good job, but more and more stocks are abandoned by trading. There's less liquidity in the breadth of stocks today than there used to be in the past.
Yeah.
I had a long conversation with the CBOE, the BATS guys years ago. They had nobody trading tons of the illiquid smaller names. This is a big topic in the US. How do you get more trading back on these names? The analogy is this: when humans were doing the only trading, you were assigned as a market maker a bucket of stocks, and you would have what I always say is sort of a crappy name that nobody trades, a mid-level name, and a good name. And the market maker used to make a lot of money on, quote, the good name.
Right.
They'd make less money on the middle name, and they'd probably lose money on the crappy name,
Right.
but they'd be assigned that name and have to deal with it
Right.
because they were allocated.
Make sure you're.
Because they were allocated those other ones.
Yeah.
The high frequency guys came in and started trading the other names. Okay, they started trading the really good names, and they took all of that profit away from these market makers who just said, "Well, why am I going to go put my obligation on trading these worse names if I don't get to make the money on the good names?" So they literally abandoned a lot of those stocks. Our business ends up picking up a lot of those abandoned stocks, and we end up trading a lot of the names on markets like the Canadian Securities Exchange or the junior NASDAQ names. A lot of our volume in our trading occurs in names that are all of a sudden hot that day or have news that day or exciting that day that may not have really even existed 2 days before on anybody's radar. In stocks, we've seen a lot in the last couple of years of stocks on the U.S. markets that start off the day at 20, 30 cents and they run up to $1, $2, $3, $4, $5, $20.
Sure.
We are the ones trading tons of those shares. Are we sitting there trying to beat a computer that's stat arbing Apple against the NASDAQ? No chance. The other thing I'd say is this. A friend of mine used to run the market making program for a large company called Citadel. I think everybody knows who they are, in Canada. And they had a theory that if we were not in the market, they would do better. Their theory was that we are basically stealing fills away from them or good trades away from them. So we exchanged some data and we ran sort of like a little project together and we took a look at it. And in the end, it turned out that they made more money because we were in the market and both of us were making money. Because although occasionally we would steal an order that they would need for their strategy, but many of the times we'd be getting out of a trade that was at a much different time frame or at a totally different strategy from anything they were doing.
Yeah.
And we were putting them into the good trades they needed to get into. So I firmly believe there will always be a need for human traders. I mean, there's a lot of computer power and capital that goes into coming up with models to trade things from an automated basis.
Yeah.
Who is going to go trade a stock that trades 20 times a day, that's 5 cents on a junior Canadian market, when the maximum amount of money they can make out of that name is a few dollars a day or $20? Who's going to go build a model for that? Nobody. But we don't have to build a model because we have these things called brains that sit there and adapt as we trade.